Welcome to the first video of the Taking the World Public series, brought to you by mergermarket and Deal Reporter in conjunction with IntraLinks. Hong Kong is obviously the best place to begin this series. Over the past decade, the territory has become the IPO capital of the world, chiefly driven by its independent judiciary, established financial markets and strategic location. However, the question remains, will Hong Kong retain its IPO crown over 2011? Or will resurgent markets elsewhere, such as New York, Shanghai or Shenzhen even, increasingly challenge its position? In order to answer these queries, mergermarket has gathered together a number of distinguished IPO practitioners to discuss Hong Kong's IPO prospects over 2011 as it looks to take the world public.
First of all, Hong Kong is where the buyers for these IPOs are. And there are a lot of investors are in Hong Kong, not only the Chinese investors, not only the Hong Kong investors, Asian investors, but also the global names. Once you come to Hong Kong, you have access to all of them. The second thing is about valuation. You want to sell for a higher price. And in Hong Kong, you have the liquidity, you have the money. The third reason, probably more pertinent to the Chinese corporates coming to Hong Kong. Hong Kong is sort of like a home market.
We have seen that in Hong Kong market, the PE has been very good. And for example, like last year, over 50% of the stock with PE over 20 to 30 times. So the room for a big jump on the first trading day will be less than before.
There will be a limited number of Chinese companies to have dual listings in Hong Kong because it's controlled by CSRC. But for international companies, if they want to, say, build a relationship with their Chinese counterparts or Chinese customers, suppliers, they will think about listing in Hong Kong.
At the end of the day, it's about creating a very fair, level playing field for the companies to list and get the benefits of increased capital, but also for the investors themselves.
Singapore actually is a major exchange in Asia, but in terms of competition for Hong Kong exchange, I do see in the future probably it's more the exchange in China.
If you look at the last 2 years, things are a little bit different because the so-called the trend of the international funds, people now see Hong Kong as a safe harbor. The reason being because the focus for Hong Kong market at the moment is more on the Chinese economy related stocks.
For companies who are from the Western country or Western world, they're very proud of their own system. They don't see why they have got to adopt something foreign to them. And so they are reluctant to change the rules. You've got to convince them a lot why they have to change the rules, why these Hong Kong rules are better than the existing rules.
If you want to be in the international markets, you don't need to go 8,000 miles over to the other side of the world now. And as China continues to grow, and we see those rates continuing to be very strong, they're going to come to Hong Kong. Amongst
the new IPOs, most of them come from the retail and consumers, industrial, financial service, and mining energy, with the retail and consumer sector as the largest share amongst the new IPO. That's why any fast-growing retail chains, any with a good PLC domestic brand or a good luxury brand, international brand with China presence, with Chinese expansion plan, will be attractive to investors. You look at the key industries that China is interested, resources, very resource hungry overall, so that becomes very attractive. And you don't need to be in Hong Kong long to see how important good brands are, or high-end brands, and so that's an attractive area of growth.
After the Hong Kong Stock Exchange introduced their new Chapter 18 rules with regard to mineral companies, we have seen quite a number of listings of mining companies on the Hong Kong Stock Exchange. Many of them are large mines, like, say, South Gobi, like Mongolian mining company, and it will establish Hong Kong as a center for listing of mining companies.
going forward, there will be still a lot of IPOs coming to Hong Kong. Hong Kong is very attractive, and now the good development is not only the Chinese companies are coming to Hong Kong. We also see, the other regions.
There will be more dual listings or secondary listings on the Hong Kong Stock Exchange in the coming years.
Something that may affect the volume of the IPO issuance is how the secondary market, the Hang Seng Index, for example, is performing. And there is definitely a correlation with the market performance.
For 2011 or 2012, definitely renminbi denominated IPO will be one of the hot topics. But I would say the investor will take some time to understand. But in the long run, I would say there will be more and more renminbi denominated IPO, and one day, hopefully, we can see a true renminbi IPO where the listing candidate can raise renminbi in Hong Kong and invest in the projects in China.